You're looking at a daily chart of the Dow Jones Industrial Average from April 18th, 1975. That's this date here. But I wanted to look back at 1974 as this bear market. This is a nasty bear market with inflation and high interest rates and gas issues. But every bear market has their own issues, and every bear market is different, but it has some of the same components. And that's why I'm making this video, to show you some of the similar components from three different indexes from three different time periods. This one traded below its 200 simple moving average for 11 months, from March of 1974 till February of 1975. And it had three legs down, which is one of the components that I look for in a bear market. It's got to have the three legs down. Here it is from 904 to 788. A little bear market rally up to the 200 simple moving average. Another leg down with a rally up, and then the third leg down where the shorts couldn't push it down any further. We have a little, attempted rally, but we have a retest of the low, which is an important component of any bear market. A low and a retest of the low. It shows that the shorts cannot push this thing down any further. And then institutions are coming in and buying stocks and buying this market, because maybe it's just, it's time, prices are too low, whatever. But there are not many absolutes in the stock market. One absolute is all bull markets start with a follow-through day. And here we have an attempted rally. And then about 5 days later, we have a follow-through day with 1.83% move with a volume above the prior day. And then, one attempted rally and follow-through day doesn't mean anything unless it has subsequent follow-through days, what I would call them. And then we have them here, as we can see, the volume coming into this market, a 2% move on above average volume. Here's another one gapping higher with volume, another 2% move with 70%. And you could see the blue volume bars. You could see the institutions. These are their footprints as this market gets into a power trend with the moving averages stacked here. But even though we have these follow-through days and the institutions coming into this market, it still cannot get through this 200 simple moving average. This provides resistance during this time. And it's not until this day where it gets 35 million shares, the largest volume it's seen in years, and it has a 1.66% move above the 200 simple moving average until that process is complete and we start this new bull market. So the components of this bear is the three legs down, the low, the retest of the low, the attempted rally, the follow-through day, the subsequent follow-through days as we get into a power trend and trade through the 200 simple moving average. And that's what I'm looking for in today's market. But I want to take a look at a couple other bear markets. This one traded below its 200 simple moving average for 12 months. And this was the 1982 S&P 500. This is a screenshot, so I cannot manipulate this chart, but you can see how vertical this first leg is, and then the bear market rally up to the 200, which was a strong rally, and then another leg down, and then this one actually rallied through the 200, which really must have made everybody think, hey, it's all done here, it's all good. But no, the shorts take another leg down, and this is the low and the retest of the low of the 106. And this time, the shorts actually pushed it down another 5% down to 101, where we saw the institutions come in bigly here, 137 million shares. And this one, the 200 did not provide resistance. It just went through it like a hot knife through butter. We had the attempted rally, the follow-through day on August 20th of 1982, and it just powered right through and started a new bull market. So that's the process, the end of the bear, the three legs down, the low, the retesting of the low, the power trend through the 200 simple moving average. And that was the S&P 500 in 1982. I want to take a look at the 2009 bear market. This is the global financial crisis. Every bear market needs a name. We had the dot-com crash and the global financial crisis. Right now we have Mr. Transitory's debacle, but that's another story. This is the three legs down component here. This was trading below its 200 for 11 months again. So we have 11 months, 12 months, 11 months, and that's pretty standard. This is another nasty bear market where the Nasdaq lost 50% of its value. But here you have the leg down, the rally up, the second leg down, the rally up, the third leg down. You have the low, the retesting of the low. And I put here the Haynes bottom because Mark Haynes called this on March 9th, 2009. A couple days later, we had like a 7% move, which was our attempted rally. And then on, I guess the follow through day was 17th, but you had like 8 follow through days here, and you're still trading below the 200 simple moving average, which acted as resistance here as it's rejected. Took a few weeks until late May. It traded through the 200, and then on June 1st had a real powerful move. But you can see these big blue volume bars as we have the 3 legs down, the low, the retest of the low, the attempted rally, the follow through day, the subsequent follow through days, the power trend as we get this big volume push through the 200 simple moving average. And we could say bye-bye to the bear and hello to the bull. And so I wanted to take a look at, today's stock market. I'm going to take a look at the NASDAQ. If I could type in the right ticker symbol, we can get there. And I'm going to get the right date here too, as we are in September of 2022. And so this should look familiar from prior charts that I showed you, as we have this first leg down from 16,212 to 12,500, and then we had a bear market rally there in the March time period, and then you have your second leg down on June 16th. It made a low of 10,565, and then had this nice 2-month rally exactly from June 16th to August 16th, 13,181, and now we have our third leg down, which coincides with the retesting of the low, so it's working pretty symmetrical here. So maybe it'll undercut this low. I don't know. 10,565 seems to be a magic number. Maybe it'll go down to 10,200. I don't know. Maybe it'll just turn around. But what's missing from this chart? We have the 3 legs down. We have the low. We have the retesting of the low underway. We'll see what happens here in the next few weeks. But what we need is a attempted rally, a follow through day, and the subsequent follow through days. That's definitely what's missing. But as in 2009, when Netflix and Green Mountain Coffee were breaking out prior to the index, I like to buy stocks. I don't like to buy the index. And this is one stock that's showing strength, breaking out prior to the NASDAQ. So if the NASDAQ starts to heal, you're going to need to look for leaders. You need to know what to buy, and you need to have these stocks identified prior to the NASDAQ getting back into a bull market. Here's Enphase, broke out on earnings last time. I have buy here because I like buying breakouts, and that's what I did. But take a look at the weeklies, and it's still in this base and kind of trading sideways, and sideways in this market, as Ben at Pattern Profit says, sideways is the new bull market. Those are your new TMLs. So sideways is good. There's another stock showing well. It's thinly traded here. You can see the average daily volume, but Aspen Technology holding up well above its 21 EMA. So that's what you look for. You look for leading stocks as the NASDAQ, tries to make this bottom and starts to heal, and we start to see, this bear market turn into a bull market. And it will happen, and I believe in it because it's happened before, and we never give up at mcstockcharts.com.